What's up, guys? It's Rob here, and today we need to talk about the CPI numbers and inflation readings that just came out today and how those are affecting the stock market, because you can see that we did have a massive drop right as these numbers came out because they were not pretty for the inflation rate. However, we've seen throughout the course of the day investors buying up stocks again, pushing prices back up, potentially because institutional investors are aware of something that we're going to talk about towards the end of this video regarding the future readings for inflation. Now, you can see that the inflation numbers that we got this month, unfortunately, were not very pretty. 1.1% was the expectation that analysts had for month-over-month inflation in June. It ended up being 1.3%. Now, that means that the annualized inflation expectations of 8.8% were also shy of the 9.1% actual inflation rate that we got. And you can see it is not a pretty inflation chart that we have. It's never been for the past year and a half, just about. We've just been seeing inflation go up and up and up. Now we've broken through the 9% mark. And you would expect that a lot of investors would be very scared, that a lot of people would be paper handsing their stocks and just selling everything because they see inflation going through the roof and are going to expect that the Fed will retaliate by raising rates. And that is an expectation that a lot of people have. A lot of people are expecting the Fed to raise rates by a bit. But looking forward, we could potentially be seeing inflation coming down for a couple of key reasons. Now, we'll have to talk a little bit more about what exactly caused this inflation for you to understand why. And you can see that the categories broken down, some of the biggest, most inflationary categories in the month of June had to do with energy and oil prices. You can see energy was up 7.5%, energy commodities up 10%, gasoline up 11%, 3.5% increase in energy services, 8.2% in piped gas services, and transportation up 2.1%. All of those are very closely related to the price of oil and gas and energy. And those were the big drivers that really dragged up the CPI to an overall 1.3% month-over-month increase in the month of June. And that's what's been scaring a lot of people, seeing this massive increase, a lot of it tied to oil. However, in the near future, it's expected, based on the price of oil currently, that we may actually see lower inflation, that potentially we could even see deflation next month if these categories continue to drop in the following month following the price of oil, because we have been, for the past couple of weeks, actually seen big decreases in the price of oil. And you can see that in June, we actually neared a top for oil, around $120 per barrel. And since early June, around June 8th or 9th, we've been decreasing, okay? But that wasn't enough to actually bring the June numbers down, because they were peaking and were remaining elevated for the prior half of the month. However, in the month of July, we've actually been making new lows on this downtrend, below $100 per barrel, finally breaking the $100 per barrel mark and staying below it for a couple of days. Hopefully, we'll continue to be able to do that. Obviously, we could reverse course and the price of oil could come back up. But as we're currently seeing, oil has been on the decline for the past month just about. And if we continue this trend and continue to remain below $100 per barrel, that could be very good for the next CPI reading. Because if you look, most of the inflation, we knocked out the first or the top 6 inflationary categories on this list of all the different things that make up the CPI, and kind of explain them away based on oil prices, right? Energy and commodities, gasoline, energy services, utility piped gas, transportation especially, have been big factors regarding inflation. And if you look over the past year, they've mostly been gasoline-related costs, right? Gasoline up 48% over the past 12 months. Airfare, very closely related to gasoline because of fuel costs, up 37%. Transportation, once again, very directly related to fuel costs, up 19%. Household energy, 19%. 4 of these top 5 categories are pretty directly related to the price of oil. And if oil is decreasing, then we can expect potentially to see a big decrease in the inflation rate overall in the next month. Now, while it's not a guarantee that that will happen, it will certainly be welcomed respite from the massive inflation that we've seen over the past year, just about year and a half. And finally breaking 9% is really scaring some people. However, it looks like the big institutional investors are not too scared. They have been buying up stocks over the course of the day ever since this drop, and potentially that's going to end. We don't have a guarantee that it's going to end, but it is a severe possibility, I think. I think that, a lot of people are looking more forward in terms of stocks instead of what's going on today. They're looking more over the next couple of months, and they're potentially going to be seeing a decrease in inflation, or at least a slowing in the increase, because that is really what people want to see. They want to see this inflation gone. They want to see it stop. and they want to see the Fed no longer having a big excuse to raise rates. They want to see the Fed start reducing their rates, actually. And whether or not that will happen over the next couple of months remains to be seen. We're going to see what happens at the next Fed meeting. We'll certainly be covering that. If you guys want coverage on that, feel free to subscribe to the channel. And other than that, guys, keep in mind, none of this is financial advice, and have a great rest of your day. I'll see you in the next one. Bye.